All right. Hey, welcome everybody. Let me know in the chat there if you can hear me all right. Feel free to pop any questions into our thread today as well. Want to just welcome you out to our monthly live stream. If my voice is a little off, it's because I'm a little under the weather. But I definitely, wanted to be here for you guys and make sure that we kind of had a little bit of a kickoff for kind of what happens over the next month and a half for in the accounting world. So, we did have the election yesterday, and election results are in for most of the situations right now. Still waiting on some stuff from the House of Representatives, but with President Trump winning, it looks like there's going to be some definite creativity and some opportunities that are going to come up, and we're going to be really keeping our ear to the ground to make sure that we're staying on top of a lot of the proposals. There's already been a lot of proposals that are thrown out there, and so I'll talk about some of those things. Patty, yes, this is recorded. If you have to jump on another call, you will be able to listen to a recording of this, so no worries on that. But the Trump tax plan that was passed in 2017 expires at the end of 2025. And the election really kind of was big on what was going to happen with that, because tax brackets are lower than they used to be. The standard deduction's a lot higher than it used to be. There's a qualified business income deduction that small business owners get. And so if those things were expiring, it didn't really matter who you were from a taxpayer perspective: rich, low income, middle income. Taxes went down for pretty much everybody, and with the Trump tax plan. And so, there has been a lot of uncertainty. I've gotten a lot of questions on, like, is there something that we should be doing to be proactive and that sort of thing. But this does kind of, give us at least a bit of an understanding of what's going to happen. Trump's tax plan's effective. He loves his tax plan. He loves everything that he does, right? And no matter what political affiliation you have, one thing that you're going to know is that with President Trump, taxes are most likely going to go down, which is really, really positive. The other side of it is that we know that there's going to be a lot of creativity with the tax plan and with tax law. It's going to be something that they will look at for sure, and look at under on an annual basis potentially. And so, um, buckle up, I guess, is what I'm getting at with that. I think we're going to see some really positive stuff. Tax policy is usually linked to growing the economy. And so something like bonus depreciation, which has come up, when they originally wrote the tax plan, they had to put something in the tax plan that made bonus depreciation go down from 100% to 80% to 60%, and then eventually to phase out. And so when we look at those types of things, they have to do that for budgeting purposes. But for us, like, if you have like the Biden administration who's been in for the last 3 years, at any point they could have said, hey, you know what? We want to extend 100% bonus depreciation. And they could have passed a bill and wrote it in. But we just really haven't seen that creativity in the past couple of years. They kind of have just let the Trump tax plan play out. So when it comes to something like bonus depreciation is where on capital assets like equipment, furniture and fixtures, certain leasehold improvements, vehicles, stuff like that, you're able to get 100% deduction depending on the year. This year it's 60% deduction. But being able to possibly get to a point where we're gonna get 100% bonus depreciation, that seems likely to me. And so, if you were kind of on the fence, hey, should I buy equipment this year? Should I wait till next year? And are really on the fence about that, that might be something that we want to pay attention to over the next month or two as maybe some of these plans start to leak out. Some of the income tax plans that have already been presented are Ray's kind of posted them into our thread here. The big one that was really meant to kind of lure seniors was to get rid of taxes on Social Security. Social Security, it kind of didn't ever make sense to me that there was taxes on Social Security because, it's just money that was pulled out of your paychecks in the first place. And so Social Security in the lowest of income brackets is not taxable, but as you have more income, it can be taxable. And so one of those proposals is no taxes on Social Security. I do think that some of the promises that were made during the campaign, I'm not necessarily thinking that the promises that were made during the campaign were hollow promises. Usually, Trump kind of has this, promises made, promises kept kind of slogan. And so, when it comes to some of these tax policy proposals, I think we could see a lot of these actually land. Maybe not all of them. I know I've seen at some point people pushing maybe eliminating the income tax altogether and then just using tariffs only. I think something like that might be a little unreasonable, but something like no taxes on Social Security income is totally possible. Another couple things that have been floated out there was maybe being able to deduct interest on car loans. All right, that's interesting. It would probably be capped at a certain amount, like student loan interest is. Student loan interest is capped at $2,500 maximum. They might do something like that with a car loan deduction. That would be helpful. That would be something that, a lot of people would be able to take a deduction for. Capital gains rates, some lower possible capital gains rates. I think something along the lines with that is, hey, this is going to get people to invest more in American companies. That's going to get people to definitely be more willing to get into real estate because they know that they're not going to get hit with big taxes on that. That's completely opposite to what Democrat policies have been proposed. A lot of times, a Democrat side of things would think that capital gains should be taxed the same as ordinary income, and so really stark contrast on something like that. But an idea that I definitely like. Keeping the income tax rates lower would be happening through the extension of the Tax Cuts and Jobs Act, and I think what they would try to do is make it permanent. So these brackets that we've been enjoying, these 10-12% brackets at the lowest levels, have been nice. Not having a 39.6% bracket has been nice. Another thing that uh, the conservative side of the aisle has typically tried to preserve is the higher estate tax limit. So right now, you and your wife or you personally can pass on to your heirs up to $11 million in money or assets and not have to pay the estate tax. But if it goes beyond that 11 million, there's a big 35% tax that people pay. So the Republicans have been very supportive of maintaining a higher estate tax so that there's not taxes due on inheritance and that type of thing. So those are some of the proposals, those are some of the ideas. I wouldn't be surprised at all if the current plan gets extended and then they add some stuff. Another thing that's been floated out there, and I think this will be a promise that they'll try to keep, is that for hospitality workers, there would be no taxes on tips. And so that is something that I think would be something that they have to fulfill that promise on, and would probably be a good one economically. So anyhow, for me as an accountant, I mean, I have clients that are on both sides of the aisle, and overall, I don't care which side of the aisle you're on. I do know that Democrats and Republicans both will come to me and figure out the way that they can have the lowest tax amount due possible. And so I get that from both sides of the aisle. Where maybe you're seeing a little enthusiasm from me on this type of thing is that we know that this administration is going to be proactive about doing some things. Whereas for the last kind of 2 or 3 years, it's been kind of status quo, and we really haven't had a lot of those kinds of changes. So, something to definitely watch. As far as tax planning goes for this year, I mean, 2025 is when the Tax Cuts and Jobs Act expires. And so 2024 for tax planning is not really affected a ton. There may be some conversation that we have about whether to, accelerate income or something like that. But overall, I think our conversation would be a lot different if Kamala Harris had won, because knowing that the Tax Cuts and Jobs Act is going to expire, that would actually probably make us look into deferring or to accelerating income right now as opposed to deferring that kind of stuff for the future. So, uh, interesting contrast the day after the election. Feel free to put comments or anything like that on your thoughts or that you're having as far as some of that goes. But anyhow, buckle up. It's going to be fun. All right. It's going to be fun. And I feel like there's a lot that's going to be in store. I think this administration with 4 years is really going to look at it like, especially with control of the Senate, possibly being able to get control of the House. I think there's going to be a motivation for them to just be like, all right, let's lay some good foundations here and hopefully have an economic boom for everybody, and hopefully for all of us, business ends up being strong and good, and we can make some progress in the business world and financially. All right, so November, December for me, really big on tax planning. Um, I'm getting some emails right now where people want to schedule some time. I'm getting, I did push out an email about a week ago where I was urging people to get their books up to date. That's the most important thing that anybody who wants a tax plan can do right now is to get their bookkeeping up to, the end of October. That way we have 10 out of the 12 months for the year and we have a pretty good idea of where people stand. Now, a lot of people get stressed about time and they think like, oh well, I have to get my tax planning done now. I only have 2 months. 2 months is an eternity. Like I've done tax planning with people on December 27th before. So we definitely have time for making sure that we're getting some stuff done. Now I don't want to wait till December 27th. The sweet spot is really over the next month. So, a lot of bookkeepers will get the October books done through October in the middle of November. And so, like, usually I get a little, like, I usually have like a 3 week period from the middle of November through the first or second week of December where we really hit tax planning hard, look at some numbers. A lot of what I like to do is first start with where you're at right now. So you'll give me your numbers, we'll get on the phone, we'll talk through your numbers. I get into the tax planning software and we calculate where you are right now. And when we calculate where you're at right now, it kind of gives you an idea where it's like, okay, you know what? I definitely want to reduce my taxable income. Or cash is kind of tight right now, so I don't necessarily want to spend money and reducing my taxable income, so I'll just stay with where I'm at. And so we have those types of conversations. Now usually what I'll do is I generally have a pretty good understanding of my clients businesses, and I kind of run through about 10 or 15 ideas of just things that I think like, hey, maybe you want to consider this or maybe you want to consider that. We have those videos, a lot of those videos on the Prosperity Society website already. So under the tax planning section, you kind of go look at some of the stuff that we're going to talk about. And so, if you go through and look at some of the stuff that we're going to talk about, and then you come to our phone call, you're a little more educated. You're a little more on point on what is going to work, what's not going to work, what you're interested in, what you're not interested in. And so, usually, I could get that done in like a half hour phone call. It's usually pretty easy. And then, whatever we kind of decide on, you're just going to go implement it. A lot of times it might be stuff centered around retirement planning. It might be centered around accelerating income or slowing down income and accelerating expenses. There may be like health savings account contributions. There's a whole slew of things. It might be S elections and payroll and stuff like that. But anyhow, I'm not necessarily going to go through all the different things today, but there is a whole slew of things that you may want to be considering before the end of the year. And so it's well worth the time to be able to get into tax planning mode and just make sure that we're all set on end of the year. You know what's happening in April when we file your tax return. There's no big surprises there. There's no penalties because you didn't make estimated payments, or there's no penalty because you didn't know that you owed 100,000 or something like that. We just have our ducks in a row for people who do planning. I will say, and maybe you can kind of sense this with, the amount of people who come to these types of things, but a lot of my clients don't take advantage of tax planning. A lot of people have to kind of call and twist their arms and be like, "Hey, let's make sure we have a call." And sometimes people have to twist my arm a little bit too, because I get a little bit kind of absorbed in calls and other stuff. So sometimes people will send me some stuff, and they'll send me some numbers and be like, "Hey, you know what, like, hey, I want to jump on with you or whatever," and I have to get that call scheduled. So those are the types of things that kind of happen this time of year. There's holiday season, kids are on fall break, and a lot of that kind of stuff. So it's a two-way street in this regard. Hopefully everybody's okay with that and understands that. But tax planning's huge. It's super important. A couple questions came through. How will the election impact federal policy for rates? Uh, I would think that President Trump would have, he's obviously not the one that sets the interest rates or anything like that, but I would think that there will be some specific pressure to reduce rates. Um, I don't know how much control the president really has in that regard, but I do know that there can be some pressure that is put there. Um, Another thing that's brought up here, and this is a good reminder, is the BOI reports. So Congress passed the Corporate Transparency Act in 2022, I believe it is. And what that required was for everybody who has ownership in an LLC or a corporation, they had to file what's called a beneficial ownership information report. It's a one-time filing, and it's not a necessarily a hard filing, but you have to provide information, name and address, and different ownership percentages. And they also want you to put a picture of your driver's license. You have to put your driver's license or a passport photo in there. So anyhow, I think it's silly. The IRS has a lot of this information already, but apparently they're trying to catch some, foreign corporation type stuff. It seems like a little bit of a reach. It's been challenged. There's a court case that's, going to take years to appeal, but anyhow, we're moving forward with just filing them. There's very stiff penalties for not filing, $500 a day and for not filing, and they are due by the end of the year. If you created a new LLC in 2024, there's actually a 90-day window where you have to file the BOI report. So this is something to take serious. This is something that over the next month and a half, we're going to be reaching out to our clients and asking them if they have any new LLCs. And the thing that I'll point out on this is in my client list, I have a list of you, the individual, and then what business tax returns that I file for you. Okay, so if I file a 1065 ABC LLC, I'll have that in my client list. But if you have a disregarded LLC where you're the sole owner and maybe you file on Schedule C, that that's different. I don't have that listed in my list of tax returns. And so what we're doing is we're sending out to everybody, we're sending out and saying, okay, here's the LLCs that we know about that are on our radar. But then we're also like, what other LLCs do you have? Because sometimes people have, ABC LLC and then they own other LLCs. And so with that model, with that structure, we're just really wanting to be dotting our I's, crossing our T's to make sure that we have all the LLCs that need to be filed and that nobody ends up getting these exorbitant fines or anything like that. I have a feeling that this is not going to be very enforced. So if you set up an LLC in February or March and you're past the 90-day window and you're super nervous and scared, let's just get it filed. There's probably some forgiveness of penalties, but I think the $500 a day thing was really to scare everybody, and I'd be really surprised if there was major enforcement on that. We'll see though. Let's see. Is there a reason why I would create an LLC? I'm a sole proprietor right now. LLCs provide asset protection. So if you're just a sole prop, and you screw up in your business and somebody decides to sue you, your personal assets are still at play there. If you have an LLC, you can kind of box off your legal liability within the company. So they can sue the company, but they can't sue you personally. So creating an LLC doesn't do anything different for you for tax purposes, but it does give you legal protections, and that's the reason that most people do it. If entities are ultimately owned by a living trust, but it is not reported, how is that handled? Are all trustees required to confirm all disregarded entities are required correct? Yes. So a disregarded entity does have to file a BOI report. Now, let's say you have an S corp that is, owned by your living trust, but like is really you the individual. Or you have a partnership that's owned by the living trust, but is still you the individual. We would still file a BOI report for you. And so like we would use your personal information even if the living trust is officially the owner. All right, I'm not that big. I do speaking and training, so I doubt anybody would sue me. True. We may want to do it for our real estate. Yes. Okay, so real estate is good to set up an LLC and give you that protection because you never know if somebody slips and falls on your property. I mean, overall, if you're talking to attorneys are going to be like, yes, you need an LLC for everything. But I have plenty of people who like have had rentals for years and like nothing's ever happened. And so it's up to you. Like if you're in California, like California has an $800 minimum LLC fee. That's kind of stiff. Um, I definitely have people in California who are like, "Hey, I'm just going to get a good insurance policy," and instead of creating a separate LLC. Um, if you're doing flips though, you still have liability that come through on flips. Um, that like you still could get sued for oh well you didn't do mold remediation right or something like that. So I always kind of think real estate is good to have an LLC. All right, to confirm, you will file the BOI for us, or we should do and share which ones have been filed. Some people are filing their own, and I don't blame anybody. If you want to file your own, that's totally fine. Um, I have my assistant Shay, who's trained on how to file the BOI reports, and we've been doing them for like $75. So, if you want us to do it, we're going to do it for you. And, we'll ask you for a couple pieces of information. We'll log in. We'll get the entity a FinCEN ID number, and we'll get it filed, and we will upload it to Box. And so we're handling that piece of it. But also what I would say, like it's not hard. Like you really could jump in there and probably figure it out. Don't fall for anybody though who's charging $400 or $500 for these things. And I know there's people out there who are doing it. Like it is not that difficult of a filing to do, and I do think that there are people that are taking advantage of other people when it comes to this kind of stuff. Just because those penalties are scary. But no, this is something that takes us like 20 minutes to file. And so we just have a small minimal fee to cover that time on that. What else do we have? Um, if you got something else and you want to drop it in there, I'm happy to jump in and get it. Um, I think I've kind of covered some of the big stuff that we're going to do over the next month and a half. Um, in December, we'll do this again. I'll talk a little bit more about what specifically we're doing before the end of the year. But the holiday seasons are upon us, and usually the pace of life slows down just a little bit. Uh, if there's specific needs from me that you guys have, the best thing I'm finding is to get it to me through email. Um, I think I'm kind of noticed that maybe too many people might have my cell phone number right now, and sometimes I'm checking text messages at 10 o'clock at night or something like that. And then, when I wake up in the morning and I come down and get back into things, maybe I'll forget about the text message or something like that. So if you have a specific need or want an appointment from me, the best thing to do is to get in my email. And getting in my email is going to be the spot where it's front and center when I sit down and start working. So that was something I wanted to point out to everybody. But I appreciate the small group that we have today. I'm happy to continue to do these things. I know it's a great educational event. Feel free to share prosperity with your friends. Like this is something where like I've been adding users. I do get, a few people every month who sign up. But if you're one of the people that find this really valuable, let's invite your friends to come to this. Let's invite other people to get some education on some things, and however I can help this community, I'm definitely going to do it. So, anyhow, I appreciate you. Quick tax planning reminders are going to be to pay yourself reasonable salary, um, fund your retirement accounts, fund health savings accounts if you have a high deductible health plan. Let's make sure that we've estimated out where your tax is going to be and that you make an appropriate fourth quarter payment so that you don't, accrue unnecessary penalties. If you're really high income, then I'm always looking at a couple things. If you want to invest in Airbnbs, you can get a big real estate deduction through a cost segregation. That might be something that we would look at. I also look at historic conservation easements, which gives you large charitable donations in exchange for contributing to a land project that is going to be donated to charity and will have an easement that will never allow anybody to build on it. That is really huge. And obviously, looking at equipment needs, vehicle purchases, and those types of things. So, hopefully, that gives you at least five or six things that you can look at. Another thing that we look at is if you are in a lower tax bracket and you have a lot of traditional IRA money, we may look at converting your traditional IRA to a Roth IRA. Those work really good when you're in a lower tax bracket. Or you're younger and you're going to have, 30 years of growth. So that's a few things that I'll touch on right now. Another one that I'll throw out there is if you have stocks, you may want to do stock harvesting your losses. Sometimes if you reach out to your broker and you look at your year to date, you might have 40 or $50,000 in capital gains. What you work with your stock advisor on is, hey, how can I offset these gains? Do I have any losses that I can take right now and not pay taxes on it? So harvesting stock losses is another really good thing that you can do. All right, let's see. Ray, I love this idea. Okay, so what Ray is suggesting here, this is usually for the older crowd, but if you have to take an RMD, required minimum distribution from your IRA, what you do is you have the RMD go to the taxes. So if you have to take out 40,000, you can tell your stockbroker or whoever your third party administrator is, you can say, I want 30,000 to go to taxes. And even though you're paying that in December, it will give you credit for those taxes paid for the whole year. So, the IRS does a little days calculation and they look at what quarter you paid the estimated taxes in. And so if you do it through your RMD and it comes through on your 1099-R form, then you'll end up getting the deduction for the whole year instead. So that's really cool. Um, no, Ali, no changes for historic conservation easements for 2024. They did change it 2 years ago to where they made it to where only historic easements could exceed the 2.5x multiplier on the charitable donation. But a historic one can still do four or more, or whatever it comes out to. But they haven't made any more changes on that. I haven't seen anything updated on that. Uh, I did get some news on the easement K1s for some people that might still be waiting on those. They should be ready the end of this week or Monday, Tuesday. So, anyhow, everyone's situations are different. Okay. So I could throw out five or six ideas. Some of you guys might be like, what? Like, what? Like, none of that even works for me. Um, so, that being said, everyone's situation is a bit different. Let me look through it. Let's go through it together. Let's see what kind of options we have. And that's the power of tax planning. That's where we really add a lot of value. All right. Stock market is at a high. If you sell stocks held inside the traditional IRA, what's the tax impact? Nothing. There's no impact of buying and selling within your traditional IRA. All right. Taxes on those are ordinary income when you distribute it, though. Okay. So you don't get capital gains tax within your IRA or upon the gains. When you pull your money out of your IRA when you retire, it's ordinary income. All right. Quarterly taxes are due January 15th, 2025. So what we do is we'll go through and look at where you stand right now. And then if you need to make a payment, you would make that payment by January 15th. All right. All right. Same rules on defined benefit plan. I have to double check to see what the max contribution is, though. Sometimes those do adjust for inflation on an annual basis. So, but defined benefit plans, nothing's changed on those. Like I said, this administration wasn't too creative when it came to certain stuff. They kind of were status quo on the Trump tax plan. So, um, no, there's always some little tinkering with different stuff, but no major changes that way. All right, guys. I appreciate you. Thanks for jamming some questions in there at the last minute there. That's really helpful when people do that. So let's keep building this up and jump into Prosperity Society. Watch some of those other videos when you get some free time. But overall, happy to jump on a call and get some time with you guys. Anyhow, thanks so much. I'm gonna try and I'm gonna go rest and hopefully I can get over this little head cold that I have. Hope you guys are all well, and we will talk to you soon.